Are you looking for a way to buy a home with no money out of your pocket? Well, then you're in the right place. My name's Scott Hastings. I'm a mortgage broker. I'm located in Charlotte, North Carolina, and I help clients in North Carolina, South Carolina, Florida, and Virginia get mortgages to buy their homes. So we'll get right to it. In this video, I'm going to talk about a couple of zero down mortgage programs. I'm going to talk about one program where you can get between 3 and 5% towards a down payment, and another program where you can get 3 to 5% down payment as a grant. And then finally, I just wanted to talk about why these programs are somewhat better than the state programs that you might have heard about. If you're in North Carolina, like the North Carolina Housing Finance Agencies program. So first wanted to talk about debt to income ratio. An FHA loan, which is what these programs are that I'm talking about, has a maximum debt to income ratio of 56%. So what is debt to income ratio? Very simply, that is the percentage of your monthly income that can go towards all of your debt. That would be anything that's on your credit report, as far as minimum payments on credit cards, your auto loans, student loans, etc., as well as the mortgage payment on the house you'll be buying. Now, no matter where you go in America, what bank, what lender, everybody has to run their mortgages through the same system, which is supplied by FHA. And what we do is we upload your income that comes from your application. We upload your credit report and your assets, what's in the bank, and get a determination of whether you are approved or not approved for an FHA loan. Now, you aren't necessarily going to be able to get up to that highest debt to income ratio. It really depends on your credit score and some other factors, usually to do with your credit. And it might be how many trade lines you have, or maybe you had too many negative things that had happened too recently, like charge-offs, late payments, etc. This first program, you can go up to the maximum debt to income ratio of 56% if you qualify. The reason that's important is the second program, you can't. Also, there is no income limit. A lot of these programs have income limits as far as down payment assistance programs, particularly offered by the state. This one, you can make no limit. And there's no maximum purchase price of the house. So the way this one works is you can have down to a 620 credit score. And one thing that's important is this loan is forgiven after 5 years. So that portion of the down payment that's given to you for the purchase, after 5 years, you don't have to pay it back. The second program is a grant. So you don't have to pay it back ever, which is fantastic. Now, you can get between 2 and 3.5% towards your down payment. So on either of these programs, you don't have to have any money out of pocket. But on the program that has the grant, there is a maximum debt to income ratio of 48.99%. And it does not have to be repaid, again, because it is a grant. Now, I also wanted to talk about why both of these programs are, in my opinion, better than the North Carolina Down Payment Assistance Program, which is a great program. I've done probably 100 or more of those over the last 10 years. With that program, with the state, there is a maximum debt to income ratio of 45%. And there's a maximum income limit. You can't make over a certain amount of money. And in an interest rate environment like we're in today, this is being recorded in November of 2023, frankly, it's just very hard to qualify for much home with where the interest rates are. So you need some room in your debt to income ratio if you can get it. You know, so, but one of the most important things is the North Carolina program, it's not forgiven until 15 years. And most people move every 5 to 7 years. What happens is sometimes people get surprised when they go to sell their house that they will get a payoff basically from the state for that money that they were, quote unquote, given towards the down payment on their house when they bought it originally. With both of the programs that I have as a mortgage broker, the ones I'm talking about today, after year 5 on the first one, you don't have to pay anything back. And on the grant, you never have to pay anything back. So particularly on this grant program, what I'm talking to clients about doing is going ahead and getting in the house. We know that all the mortgages that have been originated probably over the last year and that are being originated now are going to be refinanced because rates are going to go down. So with the grant, you can buy the house, you can refinance maybe in the next year, have a lower rate, not have to pay back that down payment assistance, and it's really a win-win. So if you found this video helpful, it would help me a lot if you would hit like and subscribe. That way you'll get notified next time I put a video up. And if you have any questions, put them in the comments below. And if you would like to get pre-approved for one of these mortgages, go to my website, mortgagesbyscott.com.